Good. Very good. Great. Great. So how you been? How's your trading? How's your practice? How's it all going?
I have to say, very good, Avi. You are helping me a lot, a lot. I'm very grateful to you because you gave me the structure I needed with these breakouts, trading these ranges. They gave me the structure I needed. Also, the waiting, these 3 minutes waiting. It was the thing I needed for me. I'm now feeling very calm trading and also confident. Because the waiting makes me feel less anxious trading. Although I hear Brian and Andrew making tons of money, for me it's okay. I have a plan. I trade a plan. If it's work, perfect. If it doesn't work, okay, I can live with that, yes, I'm feeling very, very confident now. Confident in a good way. I'm not making stupid stuff, kind of sizing up or something like that, but being more comfortable and calm. I was the last month I was trading with anxiety and also kind of scared. I came here to to my office and I was kind of scared. Okay, how much will I lose today? So no, I'm feeling confident. I'm also enjoying the pullbacks. If I see a pullback, okay, and then it works in my direction, I feel confident that I'm trading also the trend, that's also a key factor last time in the call that I realized sometimes I was more scalping than trading a trend, and with the plan and the structure and the ranges, I'm kind of now trading the trend and not so scalping, and getting maybe a little bit more of the move.
Wow, well, that's great. That's great to hear. Excellent to hear that you've found a sense of confidence in this crazy business. That's really important.
That was also very important for me, after last year with such losses, and now I'm feeling confident and calm, and that's for me is great. I can live with losing money, but I'm, as you said last time, I'm preserving my mental capital. I'm not scared anymore, and I can live with losses. It's part of the game. But I'm also feeling okay. I have a playbook that also is according to my personality,
Yeah.
and it's perfect. I don't have to wait 1 hour to trade. I can wait a few minutes and I can also trade, and I don't feel anxious. And this is perfect. It's perfect. It's great. Of course, I have days where the plan didn't work. It's okay. Or I traded the plan and it was the bad plan, and I can live with that,
Yeah.
But of course I'm also having these days where maybe the plan is a bad plan, and I have to feel I have to do something, and I have to understand, okay, maybe it will be days where I kind of do 0 trades, and in my mind, always in the business, doing something to earn money. Doing nothing, is wow, it's not so easy.
Yeah. And it's not easy to sit there and do nothing. And this is a weird business where doing nothing is a big victory in day trading, just sitting there and doing nothing. And that's really, I feel like 95% of the time, that's what we have to do. We have to do nothing. And that is really actually making money in the sense of not losing it. Because you do too much, then you end up over trading, basically.
Yes.
Poor position, stuff like that.
And that's why I respect you so much. These last weeks, as you said, I don't see nothing to trade. and I'm not trading, and it's okay. And when I trade, I do $10,000, and maybe it makes for the days that I didn't trade, and I respect this decision so much. Is admirable.
Yeah, well, it took a long time to figure that out myself. I made lots of losses up front too before I figured
Yeah.
out that better to stay away when you have a little bit of a sense of hesitation. You should
Yes.
just no point taking the risk when you know the whole game is rigged against you anyway.
Yeah.
Not get, I know it's not worth touching it until you're very confident that it's working out and looks really good.
uh,
So yeah, that's that's how it goes. That's great. Well, let's have a look. Let's have a look at some of your trades recently.
okay.
Yeah.
I have three topics I wanted to speak with you. Um, Two are more. One is more mental issue. What did you do? For example, if you do kind of two trades and they are not good trades, and you also have another plan that could work, do you stop there? Do you say, okay, maybe tomorrow will be another day? Or if you see the plan could work, you try another trade?
Yeah, that's a good one. The way I do it is
Yeah.
a lot of days I actually plan my trade before the market opens. And
Yes.
so if the price action confirms that this setup is gonna take place, it's gonna happen, then I take the position and let's say I get stopped out. And then I'm still watching the same price action for the same setup. Just because I got stopped out once doesn't mean that my plan is invalid. It just means I
Okay.
got stopped out. It could have been I got wicked out. The setup could still be
Hmm.
true in a couple of minutes or even in another minute later. So I'm still watching it. If the setup is there again, I'll take it again. And maybe I'll stop out again. And there's times where I've done that 5 times. And the fifth time it actually works.
Okay.
But only if that price action after the open is validating my plan, my setup that I had before the open. The
Okay.
whole plan I had, it's a level, it's going to break out from this level. As long as that breakout setup is taking place, then I have no problem taking the trade, even 4 or 5 times. Even if I stop out 3 or 4 times, I'll still take it again. And at
Okay.
some point, realize that that opening volatility, that's a very important thing I look for. Once I realize that that's no longer there, that it's over, that momentum drive, that it's not going to happen now, usually like 10 or 15 minutes after the open, where things are
Okay.
slowing down a little, because
Okay.
that's a big piece of my trading. Once that's gone and the trade hasn't happened, then now my whole plan is invalid. And
Okay.
so I got to shelve the plan. So it didn't work out today. I took a few attempts at it, stopped out, and that's it. It's over. So I really consider that as one trade. It's just multiple attempts on one setup.
Okay. Okay.
Think it that. Then there's other trades or other setups, and you can take multiple stabs at that too. And that's the tricky thing about day trading, because in day trading we gotta, we gotta really get tight entries with tight stop
Hmm.
loss, tight risk management. Because in day trading we take heavy size, we use margin accounts and all kinds of things. So the tricky thing is you got to get used to stopping out. So even if you get
Okay.
in, after you get in, the price action could just make a wick against you and hit your stop loss. And you have to
Hmm.
stop out because that's the rule.
Yes.
And that's your rule. Because you don't know while it's making that wick, while it's going down, let's say you're in a long position, it's going down and it hits your stop loss. You don't know if it's going to go back up and actually make a
Hmm.
wick. You don't know.
Yes.
While it's going down, you need to get out. You must get out. And then if it happens to go back into whatever you're looking at, a level or a moving average or whatever, and the setup is fine there, then you may re-enter. And actually then, usually if it makes a wick, like I'm looking for a long and it makes a hammer, it stops me out at the bottom of that hammer. Well, actually after that hammer, I have more conviction that it's going to go because it
Okay.
made a hammer. There are buyers underneath it to support it going up.
Hmm.
So, things change like that. You got to keep watching the price action. And
Okay.
sometimes stopping out actually gives me more conviction it's about to work if the price action tells me that with the volume. So that's the way I do it, which is very quite different or quite unique because I actually make a plan before the open. I look at longer
Hmm.
time frames
Yes.
and make a plan. If you're doing it the other way where you just put some stocks on the screen that you think are in play and then you watch the price action, well, there's a different way to do it.
Hmm.
Then you watch what's the opening range that it's making. Does it look like it's going to break out of this range anytime soon? Or are you looking for ABCD patterns, for examples, or are you waiting for it to really make a big move and then you're trying to play a reversal a little later on?
Okay.
Different ways to do things. Over there, you may not want to give it 3 or 4 attempts. Maybe two might be it, and then you realize, okay, you're just looking at the wrong thing. So there's that too. So the reason I'm able to take multiple stabs at one trade is because I get my conviction from the bigger time frames. And that's the way
Okay.
I've set up my trade book. The 30-minute and the daily chart. That's primarily what I use to get my conviction to have my setup. And the 1 minute is just confirmation that this setup is coming true.
Okay.
So again, getting really intimate with your trade book is what will give you the answer, whether you should re-enter or not re-enter. The 1 minute chart is just confirmation. It's not setup. Setup is a bigger time frame.
Yes, yes.
So you got to know the details of your trade book.
Okay.
And that's what we're trying to do here, trying to develop your trade book. And so it has to be a reflection of your personality. So you're not fighting it. It's not complicated to your mind. It should be great and clear in your mind. So when you're watching it live, you can decipher it quick and easy.
Okay. Okay. And for example, if you try once, yeah, and you were stopped out, you lost 1 hour. Yes. The next try that you do, are you risking again 1 hour, or are you maybe putting the stop loss a little more tighter to lose maybe half an hour?
Now you got to put the stop loss not based on whether you lost the previous trade or not. That should have no impact on this new trade, because this is a new trade. It has nothing to do with that loss a few minutes ago. That's really, really important. So the stop loss should be based on a technical level, should be based on the trade plan, on the setup. So if your plan is that it's holding this level as support, your stop loss should be just a little below that support, and that's it. There's no two ways about that.
Okay. And you put the stop loss as you planned before, or maybe if you see the wick from the hammer and you see the support at a level, you put the stop loss kind of below this level to be sure.
Yeah, you can do that. That's where the confirmation comes in. Like I use the 1 minute for confirmation. So if you're getting more confirmations of where the buyers and sellers are, where they're tending to play, then you use that as stop loss area.
Okay. Yes. Yes. I kind of also with the live trading, I kind of sometimes going in with half a position, and then if I see the final confirmation, I add the other half of position to be sure, and that's working also well.
Very good. Yeah, that's great. I like to do that too. I think that's a very powerful strategy where you're not risking too much prematurely. You more based on more confirmation. So let's say you with the setup and then the setup starts to work, then you can add into that. And that makes your whole trade bigger. But when you add in, you're adding in because you got further confirmation. So with further confirmation, also you can move your stop loss in tighter.
Okay.
Adding in, you have a bigger position, but you're not genuinely risking more dollars because you've tightened your stop loss as well.
Okay. Yes.
And so, I like to go with that. So in a trend, when you can do a trailing stop, for example, if it's trending, holding a moving average, then you could, keep the stop loss to trail the moving average.
Okay.
One example of doing it.
Yes.
So there's ways to do that. It's something I like to do a lot, after taking partials, if it's making a new range and then it looks like it's breaking out of a new range, so I'll move my stop loss into that new range and add in at that new range breakout. So that it helps a lot. For that, of course, you have to be really sharp on the price. You got to keep watching it, watching the volume, watching the price, watching the tape, watching the level 2, all that stuff. And when you get good at it, what you'll realize is your trades are getting quite big. The more you add in, the bigger they get. And it's got a bit of a multiplying effect. It's not really adding, it's like multiplying when it comes to adding in. It's funny how that works. And that to me is the best way to scale up into bigger size.
Okay.
Rather than just going, okay, from now on, I risk double what I did last week on every trade. That's not the way to go bigger. Scale in to your trades. You've already got a good thing going. You're consistent with it. You know how to get into good positions. And then you bring in this whole thing where you're adding in with further confirmation. And again, you can add in even after taking partials. You buy some shares, you sell some, then you buy them right back even more maybe, and move your stop loss to a new break-even price, and then let it
Okay.
run target. So there's all that, and that stuff is really powerful. That's I think that's where you really can get bigger without outsizing yourself, because then you
Yes.
take so much risk that it freaks you out that you can no longer make good decisions. That's definitely, if you're already doing that, that's the best, you know. That's
Yes,
the
yes,
way.
yes.
Yeah.
It's kind of also working because I sometimes realize I try to trade always the same stocks to learn from the stocks how they behave and to be easier. And sometimes the stock may be in play, and I realize, okay, the 300 shares today with the volatility is a lot, and maybe I scale down to 150 or 200, and then at scale in with the other half of the position, and that's working for me. Otherwise, if it's going a little bit against my direction, I'm kind of feeling anxious, and this way I have a little more room to risk with my stop loss, and then it's kind of comfortable for me.
Yeah, there you
Yeah,
go. You're
yeah,
managing
great.
really well.
Great.
It's
And are we associated with trying with a plan and not getting a result from the plan? In the past, last month, I was doing this revenge trading, you know. I was planning, okay, we'll go long. I tried twice and go down, and then I short it. And it was not in my plan.
no.
Do you have a recommendation how to avoid that? Because I'm now maybe once in a month doing that. Uh, Several months ago, it will be maybe once in a week, and now it's once in a month. It's better. Do you have a recommendation to avoid these days? Because I was looking at my Excel sheet with all the gains and losses, and maybe these days I lose $600, you know, and I can win the whole week. And one day of the week, I was doing this revenge trading and losing all the gains of the week, you know.
Yeah.
And now it's once a month, but also I want to completely avoid if it's possible to avoid.
Yeah. So the key thing is you have a plan, you attempt it, and it goes the other way. Now, the thing is your plan, you're going to focus on that. You have that. That's your setup, that's your strategy, that's your whole thing. And you've made that plan based on whatever you've looked at before the market opened, bigger time frames, catalysts, whatever it may
Yes.
be. And then based on a couple of 1 minute candles, you're turning that around. It's not giving you enough to turn it around. How can a couple of 60-second candles turn around something much bigger?
Okay.
So if you do want to, let's say you had the plan to go long and didn't work, now you want to go short. Well, you got to have a new plan for the short. Sure, it's separate. It's not a revenge of that one that didn't work.
Yes.
Got to be based on now you've identified a lot of sellers at a very key level and there are no buyers in the way and all of that stuff. You know, you got to have a whole plan together for that trade. And it's losing VWAP, it's got volume going down, all of that's a whole new plan. There's nothing wrong with switching directions, but make sure you do it with a specific plan other than revenge trading. That's not a
Okay.
plan.
Yes.
Trading
Yes.
is just it's an emotional wreck and it's a mess, and that's not where you want to go with it.
Mm.
So, you know, and here's the key thing about risk management. We talk about risk management as number of dollars you risk in the market, taking good setups, all that stuff. Okay, that's true. That's all there. But the bigger piece of risk management is the human being, is the trader, not the trading.
Yes.
So the risk management on the trader is that whole emotional side of it, where you got in, you took a loss, you got in again, took another loss, now you're pissed, and now you just go long, not long, you go bigger in any direction that you think the stock may quickly want to go in the next 20 seconds.
Yes.
That's not trading now. That's emotional mess, you know.
Yeah.
That's
It's more
emotional.
Gambling.
It's not even decision making anymore. Now that's just impulsivity.
Yes.
And anger and fear of walking away having lost money, and it's all a big hodgepodge of a mess. So that's risk management, to manage yourself while you're trading. That's why I like to say your method of trading needs to be really, really specific to the human being, so that it has certain triggers in your process, has certain triggers that trigger you to make clean, clear decisions. And rules must be in place in your process so that you don't get triggered into emotional trading.
Okay.
Like taking a couple of losses, now you get triggered. Okay, so we have to put a rule in place of what do you do when you take a couple of losses so you don't fall into that trap where you get emotionally triggered by the next little uptick or downtick in the stock and you chase it. So that's real risk management. I mean, the bigger picture of risk management. And the funny part is, once you get good at that, what I've discovered is you're able to take massive losses without getting flustered about it. And 2 minutes later, you're in a big trade. You outweigh all those losses and a lot more. I've seen the experienced guys, they really are able to do that, because really trading is we are emotional creatures as human beings, and trading is very triggering to us, incredibly triggering. That's all to do with our relationship with money and stuff. But the practicality is that it's very, very triggering. And so again, we have to manage our emotions. There's emotional intelligence that comes into play. And the way to practice all this stuff is actually outside of trading, is your whole lifestyle, your daily routine, the way you conduct yourself, the way you take care of your health, the way you have discipline in your life. Basically, if you practice discipline outside trading, when you come to trading, you have a nature for discipline. It's almost instinctive that you are disciplined. You will do the right thing even if you don't want to do it. You want to eat that ice cream, but you don't, because you have discipline, right?
Yes.
You go to the gym, even though you don't feel like it this morning, you're kind of slow and lazy, but you still go. That's discipline. Now, if you conduct yourself like that throughout life, then when it comes to trading, that discipline will come out as well. You see that price action go, but you will not take it because that's not your trading plan. That's discipline.
Okay.
So all of that stuff. I mean, if people ask me what's my trade book, I tell them, well, my trade book is extremely complicated because it has to do with my whole 24 hours every day. I have to behave a certain way. So when I come to trade, I can actually turn on the thing, the trading terminal, and I can go into the chat room and all, look at it and realize, oh crap, there's nothing here for me to trade. And I have to have the discipline to shut that down and walk away.
Yes.
That's hard. And the only way to do that is to build it instinctively. The first couple of weeks of discipline is hard, but after you do it for a couple of weeks, discipline turns into instinct. And that's when it gets powerful. And that's when you come to trading and you're able to take a big size, you stop out, no big deal. You come back a few days later, you take another one, and it's bigger than you ever made, more money than you ever made before. Yes. So all that stuff comes in. So really the bigger results come from the person. Like 80% of the results come from the person. 20% of it is technicalities. Where do you put your stop loss? What's the setup? And that's not too complicated. There's a few indicators to look at, not a whole lot.
Yes.
So, and I've seen this, I'm not just in myself, but with everyone I worked with, everyone in the day trading world, even in the investing world, it's actually not too different. It's a lot of discipline of why you should hold on for another 1 year before selling it, all that stuff. So it's try and focus in on that stuff. That's where the powerful results come. That's where the harder work has to be done. That's the hard work stuff. Day trading, the simple stuff is on the screen, technical stuff. Yeah, put up a few more monitors, make it look pretty. That's okay, but that's not so hard to do. But the discipline, the hard work is in you, in the way you conduct. I hope that makes sense.
Yes, a lot. No, thank you. Great. And the other topic is, I asked you in X about to look at the cues as you are trading, because I realized with some stocks they are very correlated to the moves from the SPY or the cues, and I'm not trading everyday stocks in play. And I realized that the stocks, if they are not in play, they behave sometimes similar to the Qs and the SPY. and I'm trying. I was in the past trading looking at the cues, and I'm trying now to put the cues to the side and not to look at them, you know.
Mhm.
But maybe it's an habit I have now that I have to look. On the other hand, in the simulator on the trading terminal, I'm trading without looking to the cues,
Yeah.
and it's working also. You know.
Yeah.
Uh,
Yeah.
what can you recommend me? Shall I on DAS put the cues away and don't look at it and trade as in a simulator or
Yeah. So you're getting results in the simulator, just replicate that in real life, and that's it. Now, that's a simple way to think about it. But
okay?
I'm assuming the few stocks you're trading are those few tech stocks, right? The popular ones like Tesla and AMD and Nvidia,
Yes,
Amazon.
not every day because I have the other stocks like I was looking the whole year last year, and I also planning with these stocks that I know. I'm using on the simulator, yes, only these stocks, AMD, Tesla,
Mhm.
um, yes, Amazon, these stocks. But trading on the live trading, I'm using the old stocks also.
Mm. Okay. Well, again, if you're getting results in the simulator just trading these 3 or 4 stocks,
Yes.
then just stick to them. And
Okay.
even the layout, what I did for a while also is the simulator has 2 screens, right? The left and right. You can't
Yes.
split them. So even on DOS, I just duplicated that left and right. And I just made it look the same as well. So when I'm
Okay.
moving my eyes around the screen, looking at volume and candles and all, I'm looking at the same place on the screen every time. So
Hmm.
your eyes also get used to where you got to look. So if you're spending so many hours in the simulator and getting results,
Yes.
then definitely replicate that on your trading platform.
Okay.
And you're saying you're using the same stocks, random days in the past. Okay. So you can do that on any day now. You know your watch list already every day. So if
Okay.
you got a system that works.
Hmm.
Now you're doing that in the simulator. What you got to do in the live market is paper trade in the live market and see if you're able to get results paper trading it, and
Okay.
then go live, bring on some small size, and
Okay.
bring it. And as the queues are concerned, yeah, there's this belief that you can get an indicator of which direction it'll go.
Hmm.
I've always found it to be more complexity than anything valuable.
Okay.
Um, and me too, I only trade those top 7 stocks or so, and mostly just the top 4. I hardly look at the others unless
Okay.
there's reason to. And I don't look at the cues. I just don't. Because within these individual stocks, yes, they can all kind of go in the same direction, but they'll give you a different setup. Some of them will
Hmm.
give you a good breakout setup and go in that direction. Other one will just pop out of nowhere and go,
Yes.
and you can't get in. So I am actually just looking at those individual stocks. And the thing about the queues is it's pretty much run by those top 5 stocks anyway. And so is the SPY at this point.
Yes. It's
Um,
true.
so um, to put it simply, I think you're putting in a lot of effort to look at these indexes and not getting much value out of it. Again, the whole 80/20 thing, putting in so much
Yes.
effort, very, very little value. Um, and actually, it's a bit detrimental because it could confuse you.
Yes, yes. I lose conviction. If I see that my stock is going up and the Qs is going down,
Mm.
I'm losing conviction. It's true,
Yeah.
yeah.
Yeah, and I believe that too. Now there are guys who do it the other way, where they get
Yes.
convicted by looking at it. Okay, and there's
Mm.
nothing wrong with that. So if your mind works this way, then focus in on here. You don't have to go and do that because everyone else is doing that.
Okay.
You should do what you're able to get results with. And that's what counts. And also in my experience, it's that opening session, the volatility right at the open, the momentum. I think it's important to get intimate with every stock that is on your list and
Mm.
really get to know what they're doing. What does a level 2 look like there? What does the volume look like? Where are the buyers and sellers? What levels are they using? What moving averages is it respecting? And what does the 30-minute chart look like on them? That's already quite a lot to look at. If you're looking at four
Yeah,
stocks and you look at all those things,
it's
that's a lot
true.
right now. You bring in the cues, and I'm like, whoa, no, man, it's enough. It's overwhelming.
Yes. Okay. Yeah, great, great.
Yeah.
Yeah, yeah. Okay, and the last topic is I'm planning the ranges, these breakouts, and sometimes I'm struggling because where I plan the ranges is far away from the opening price or far away from VWAP. And sometimes I lose conviction if I play the breakout and the VWAP is far away, because in my mind say the stock has to retest VWAP every time soon if it's so far away. And I have to improve the plan. That's one point maybe, because I'm looking for these breakouts far away, and I can plan it more near the opening price, maybe. And that's why I can show you a few examples. I was in the simulator also, okay, I plan the range, but if I see that the stock, the range is far away and the stock is giving me the idea that it's going in my direction, I trade in the range, between the ranges. I can show you a few examples I brought down, but I wanted to look with you maybe if the plan is not accurate enough. If I can find other levels, because I always find or look at the previous day close or pre-market high or pre-market low, or the previous day high, previous day low, and maybe the plan is not accurate enough.
Yeah, that's a good question. So here's the thing. There's nothing wrong with identifying levels as you identify them on a bigger time frame. I mean, what
Yes.
makes you? And if it's a level that you're convinced with where it was support, now it's resistance, for example, that's a convincing level, especially at a big round number, all that stuff. And if that happens to be away from the opening price, it doesn't mean you change the level to come closer to the price, because that's just invalidating the whole thing. All it means is that you're not likely to take a trade off of that level at the open. The price may go there. It may take a half hour to go there. It may take 2 hours to go there. It may go there today. It may not even go there.
Yes.
Once it gets there, then you can take a trade.
Okay.
One thing you also do not, so you don't want to force that trade at the open when it's far away. If it's far from VWAP and you're getting to it, at the open, generally, you want to take trades closer to VWAP, especially as far as, range breakouts are concerned.
Yes.
But then there's no point forcing yourself to find levels close to the opening price, because you're gonna create phantom levels.
Yeah.
You're gonna screw with yourself, basically.
Yeah,
So
yeah, it
that's
could
something
be.
to be careful of. And that's when a lot of days I stay out of the market, because I just can't find a level, and I only want to trade the first 10, 15 minutes.
Okay.
Beyond that, I know I don't have a really good read on price action. I have a better read when things are faster. That's just the way my mind works.
Yes.
I make a mess of it a little later on. That's when I make my losses.
Okay.
So I mean, but that's just my way. So I stay away from the market if I can't plan something that's close to where it looks like it's going to open and likely to give me an opportunity in the first 10, 15 minutes.
Okay.
So, but the last thing, the most dangerous thing you want to do is create these phantom levels. Just because that's where you want to trade doesn't mean the market's going to give it. The market doesn't owe you anything. That I can tell you. Okay.
Yes.
The moment you start screwing around, creating phantom stuff on your screen, the market will eat you up completely. It'll just shoot you down. You won't even know what happened. So just stick to your method. You got a good method. You're able to find levels that make sense to your eyes. And if they make sense to your eyes, what's important is that when it comes to taking the trade off of that level, you'll have conviction on your trade. You'll be able to make confident decisions. as compared to trade a level just because you wanted to be there. And then when it comes to taking the trade off of that level, you're going to be kind of nervous and anxious about it. And then you're not going to make great decisions. That's when over trading starts. That's when losses come in. And then later you wonder what the hell happened.
Yes.
So don't screw around with it. And if your trading style is trade off of levels that you pre-planned, and then sometimes you have to sit out of the market for a few days at a time, sit out. Go and do something else. There's so much out there in this world beyond trading, you know.
Yeah.
Do stuff.
So okay, great. I will share my wait, sure.
Yeah, let's look at some of your trades. This will be great.
Yes. Wait here.